Hello and welcome to another engagement to this month's non-farm payrolls for the month of August. So this is for July's data, and very exciting this time around as we've had such a big such big job numbers in the last session, and we're actually hoping to exceed that number as well. Early reports did say that it would get up to 900,000 new jobs to be added in the month of July, and this is off a bounce of 850,000 jobs that was added in the previous month. However, it's gone down slightly now to 870,000 jobs. So still pretty progressive though, because when it slumped down to 200,000 a few months ago, there was a real worry about the recovery of the labour market due to the pandemic. The last thing we need in the American economy at the moment is another slowdown or potential slowdown. So we'll see how that forms and comes into play, at least into the next, into this month. And as we get into the middle of the third quarter now, just going into the month of August, obviously. So very, very exciting times. And just to see what the outcome is for 2021 as we go into 2022 shortly. So let's just get a disclaimer out of the way just to proceed with the standard things going on in the NFP seminar. So foreign exchange trading and investment in derivatives can be highly speculative and may result in losses as well as profits. Foreign exchange and derivatives trading is not suitable for everyone, and only risk capital should be applied. This webinar is provided for information purposes only, and no information contained herein constitutes a solicitation for the purpose or the purchase or sale of any commodity, security, investment, nor should it serve as a basis for any investment decision. Orbix Limited does not guarantee the accuracy or completeness of information or analyst supply. So with that being said, let's just take a look at the previous jobs numbers and all the data that kind of makes up the NFP, and also the jobs numbers in general in all sectors in America for the last trading sessions. So analysts do expect an increase of 20,000 jobs to 870,000. As I said, it was up at 900,000 about a couple of weeks ago. So we were hoping to get to that magical 1 million mark, but it has faltered slightly. So not much of a difference from last month to this month, but it is still a good jobs number. So let's see later when we're checking out the charts how that's going to affect the basket of the foreign exchange majors. So June's data beat expectations quite vastly, and we're seeing a slight increase in unemployment rate. It was on 5.9%, or sorry, decrease, and that's at 5.7 for this time around. So not too much in the way of unemployment figures, so that's nothing to really get excited about at the moment. Optimism is heightened. However, there is cautionary events happening after there has been a surge in COVID infection, across some states in America. Nevada is one of them, after 12 of their counties are now actually asking the use of face masks outside. So that has actually gone up, which is a little bit worrying, because obviously Nevada is where a lot of holiday makers, domestic holiday makers, take their vacations. So Las Vegas and Reno being a couple of cities where there is a big tourist attraction for Americas, as well as people traveling from outside the country as well. So this has been could be a bit detrimental for jobs growth as well. Average hourly earnings as well are supposed to slightly increase. So jobless claims on the weekly unemployment claims, remain below the 500,000 bracket, and they came in at 385,000. We'll take a look at the graph in a minute on that, but it is still dipping slightly. We had a slight upturn in jobless claims the previous week, but obviously we can't keep dipping down lower and lower forever. So if we take a look at pre-pandemic levels, the average weekly jobless claims was roughly about the 200,000 mark, but obviously it went up quite significantly during the course of the pandemic, over 1 million. Took a while to get below 1 million, and now it's ranging under the 500,000 brackets. That's very, very important as well. However, ADP, which is the private sector jobs, they missed figures vastly by 365,000. and the below market forecast of almost 700,000 jobs to be added there. So that was quite significant in that respect as well. So we just take a look on the chart for the jobs growth. As you can see, up until when we had the second wave at the end of 2020, where we dipped into negative territory, we've had this kind of three-bar accentuation, and then the 269,000 jobs, I think it was 268,000, and then got revised up 1,000. This was a very big miss on the NFP data, but since then we have been climbing slowly. But if you do take a look at the pattern here, we could see another miss this time around. But if we see a miss of that magnitude of 300,000 new jobs added from a proposed almost 900,000, then we could see a big swing in the dollar pairs across the board, and obviously this would affect the commodities such as oil and gold as well, because oil is really based on the recovery at the moment, and gold is obviously the whipsaw effect between the greenback and this yellow metal. So we'll see how that plays out. So just a quick look. So this is the weekly unemployment chart. So as you can see, as I said, 385,000 jobs added, which is quite good. Unemployment claims, that's quite good. The lowest level in a month, and broadly in line with market expectations. Like I said before, pre-pandemic levels of 200,000 on average. So it still has a long way to go, but as you can see, we're dipping quite well on a week-by-week basis. We've had some spikes, but this was to be expected because it isn't obviously going to keep going down and down and down until it goes to zero. There's always going to be unemployment claims in any economy on a weekly basis. So, but to keep it under the 500,000 mark was very significant as well. Just looking at the annual inflation, CPI as well, we've had an increase of up to 5.4%, above market forecast of 4.9%, and this is the highest inflation we've seen since August 2008, which is again very, very significant as well. However, like we've said before, employers are finding it difficult to fill open positions, because obviously with these weekly checks from the government for unemployed people or for people on a scheme to stay at home, people would obviously rather stay at home than obviously venture out. And obviously the CPI data as well is it's a tool for measuring the average change in price on consumer goods and services as well. So with this being said, CPI data is back in positive territory after hitting negative territory during the height of the pandemic in 2020. Obviously, if a CPI is a measure of goods that have been bought and sold, goods and services bought and sold by consumers, then this obviously lagged quite a lot in the height of the pandemic and even this year. But we are seeing a turnaround in the CPI figures for 2021, as naturally people are paying a lot more for goods and services such as energies, food, and other things like vehicles, and looking to really start pushing on the CPI factor as well. So let's just take a look at the lagging and leading indicators that we'd like to look at during the NFP, just to give us a little taste of what could be out there and what the possibilities are as well. So we've got manufacturing and services industry. They have obviously been bolstered, but we have had some misses in the last few months because of the labour market recovery not really being in a very clear standpoint, due to the fact that 1 minute the COVID cases are going down, live events, sporting events, any events you can think of, or we're having full attendance at some of these events, but now we're seeing a lot more of a spike in COVID cases as well across America. And we're seeing that the country will experience more pain and suffering, apparently, from a lot of analysts as we go into the back end of 2021 at least. We had doctors saying that there has been an acceleration in COVID viruses and infections as well. And we're not looking at more lockdowns in America, but obviously are looking at a lot more people having to wear face masks, and maybe these people are going to be staying at home, which will mean restaurants, bars, these kind of hospitality, catering industries will not have the staff sufficient to cope with demand. That is expected to happen at the end of 2021 at least. So it has been a little bit of a, let's say, what's the best word to describe it? a bit of an anticlimax, let's say, that we were supposed to see a gradual reopening of everything around the world, not just America, but we have seeing a bit of a spike in infections, which has led to people complaining about the slow rollout of vaccinations across America as well. We've had places, big companies like Amazon, Wells Fargo and BlackRock that have postponed their staff from coming in to the office for at least a few more months. Amazon have said not until 2022, and Wells Fargo and BlackRock and other companies, other big names, have said they're going to delay until October to see what the restrictions are going to look like then. Obviously, just turning to the other side of the globe, we've seen Australia that's still in lockdown as well, so we'll see how the Aussie is affected against the dollar as we go into Q3, or the back end of Q3 at least. So, as I said, Nevada are reinstating a mask mandate for indoor events as well, and probably that will go to outdoor as well. So, getting back to the lagging and leading indicators, so we're just seeing the manufacturing and services industry, challenger job cuts and jobless claims. We've just touched upon challenger job cuts as well. Very, very important to see how many job cuts there have been in America for the last month. ADP, like I just touched upon as well, private jobs missed vastly, so this will be a good indication to see what the next month will bring. Consumer confidence, so University of Michigan and CB. So University of Michigan is a questionnaire that's been around for roughly about 80 years now. Very, very important. It interviews a lot of people to see how their confidence is and what they are looking at in respect to that area. And leading indicators, is treasury yields and equities bouncing up and down. Equities at record highs pretty much at the moment. We've seen the Dow Jones hit 35,000 for the first time ever, and the Nasdaq and S&P are hitting record close prices as well. Not on a daily basis, but they have been hitting them. But obviously we are having an earnings season now like no other, where a lot of companies are really starting to show what a COVID lifting is happening to a lot of companies. So, you've had big major banks in the US, you've had big companies such as Amazon, and, I could go on and on and on, the big Silicon Valley tech giants as well. And this earnings report was expected that it was going to be a good one for a lot of companies. They've exceeded expectations. Wall Street expectations have been blown out of the water due to the fact that obviously COVID restrictions are lifting for the majority of 2021. So this means that a lot more people are spending money, and obviously it is showing on the equities as well. Crude oil as well, it has dipped a little bit back to $68, but it has been pretty much in a range of $73 to $68 for the last few months, and we are expecting it to push higher due to the fact that the big COVID unlocking is upon us, and a lot more travel restrictions have been lifted as well. There is a cautionary, let's say, not optimism, but there is a caution around the fact that travel might come to a slight halt. Obviously, it's going to take a few years to get to pre-pandemic levels, but oil is a major front runner when it comes to seeing what the projections are for the big COVID uprising, let's say. So let's just take a look at the list here. So we've got pros and cons. At the moment, it's pretty much in favor of the pros. We've had a little bit of a downturn on the service industry in the last month. This is because, as I said, even though we have had this big uplifting on the COVID restrictions, there is a slight caution that we could be, because of the spikes in COVID cases in America at the moment, and the poor or slow rollout, let's say, across the continent, in North America especially, that we could see a little bit of a halt and decline in the labour market especially. So this is why there is a few cons. Jobless claims, that's in red because it just came shy of the expectant, but it's pretty much on course, so no need to take any notice of that. ADP, on the other hand, as I said, forecasted of nearly 700,000 jobs, came in at 330,000, so that was quite a big a big divergence on the consensus and the actual in for this time around. University of Michigan consumer sentiment very positive there, and consumer confidence and retail sales as well. We dipped into negative territory in the last reading, but core retail sales did pick up. Even though it's just under 1%, it is still something to be joyful about in that respect. Treasury yields at the moment haven't really changed too much, and equities and crude oil, this was just in the last hour as well, but obviously crude oil is on the up and so are equities as well, so very significant there as we go into the back end of as we get into August as well. Nothing really too much to change on the interest rate differentials. Just looking at the strength of some of the foreign exchange currencies at the moment. Euro and pound are a little bit down because the dollar had such a bit of a good day yesterday. So we're just seeing what the potentials are. So for example, if it is a good jobs number, we are looking to see if the euro and pound pairs will be good to be traded against the dollar. But we'll have a look at this shortly. Just want to take you through a few points that I always like to just touch upon about protecting your risk capital. Like I mentioned in the disclaimer, risk capital should only be applied when trading high impact news events such as the non-farm payrolls. And, we are looking to try and protect as much capital as possible in that sense. So number one, avoid trading during the NFP as volatility is high and whipsaw effect could lead to losses that exceed profits. So this is just 101. If you don't want to be involved in such a high impact news event, then avoid something like the NFP altogether. With this news event at the moment, we've also got Canadian news that we're going to look at as well, and this is in the form of their own unemployment rate as well as average hourly earnings, and employment changes as well. So sometimes in the NFP segment, we also get big news coming out of Canada as well. So watch the dollar Canadian, especially during this slight period. And also later in the day, we do have the IV PMI for Canada as well, which is quite a big news event for North America in general, not just for the Canadian pairs. So, if you want to avoid all potential volatility, because it could be high volatility, especially if jobs numbers miss vastly, because it is supposed to be a high news event for this turnaround, a high jobs number. If it does miss, then we could see quite a big plummet on dollar pairs across the board. So avoid this at all costs if you don't want to get involved in the in high impact fundamental news trading. Number two, apply protective stop loss and take profit risk management measures in order to bypass emotional hurdles. So we've all been there and done it. We've probably let our emotions get the better of us, at least when we're trading, when we're starting out. At least it's very difficult not to in some circumstances. So always manage your top stop losses as well as take profits. A lot of traders think if they've got a stop loss in, they're protected, but if you've got a take profit in that is realistic, you could hit that take profit, get out of the trade, and not have to worry about missing that take profit and then prices going down and missing that potential profit that you could make on not just one trade but many trades open, depending how many trades you're trading on, how many positions you've got open during a high impact fundamental news event. Number three, close out all positions, if any, ahead of the release in an attempt to divert from high volatility risks. So this basically ties into point 1 and 2. Close out all positions if you don't want to even be involved in volatility, and obviously letting your emotions get the best of you when you think that a trade might go on one way, but unfortunately goes the other way, and obviously risk capital is hit, and then you receive a margin call, which we don't want, and then obviously a stop out, which is obviously the end of the line for some trades. So you don't want to get involved in any of these high impact, high risk events if you don't have to. Number 4, hedge your positions if you have any open, if you have more than one position open in the opposite direction, in case your risk is minimum because you want to trade long term and stop loss and the stop loss is far from being hit anyway. So hedging can be a very good tool in that respect, but you don't want to really get involved in anything that could potentially damage your trading strategy as well as your risk capital. So hedge if you need to, but obviously keep in line with the hedging protocols to make sure that one side is not too far in a loss, sorry, because you could stop out in a positive position as well as a negative position as well. It is actually possible, because obviously if you reach your margin call and stop out whatever percentage you have for a stop out, then you could actually, that your trade could be closed in a positive position as well. So not a lot of traders realize that, so just something to keep an eye out for as well. Number 5, if you're eager to trade despite the warnings, do let the market calm down before entering a trade. That way you circumvent the heated environment and also have a clearer picture as to where the markets could be heading towards as market noise is reduced. So even if you want to trade post market release or post NFP release, let's say, then do let the markets calm down quite significantly. So for example, we have the NFP data today as well as the Canadian data, but 1 hour and a half later we have the Canadian PMI IV. So that could also be very, very detrimental or positive to trades, and could cause a lot of volatility as the market noise is expected to continue maybe an hour or 2 hours after the NFP has been released. Usually upon the NFP news release, we do get that surge in the 1 or 2 minutes after the release of maybe 50-60 pip spike on a lot of the major pairs, but after the market noise is closed or dimmed down, we could see a possible shake-up of markets post-release. So something very important to look after and look out for then. Number 6, analyze the data post-release, which is something that point 5 is just touching on. Without supporting employment, wage, and unemployment data, any directional trade is at risk of a reverse despite the NFP being over. So this just comes into the 3 major things, employment, wages or salaries or average hourly earnings, and unemployment data. So this comes in with the Canadian market as well this time around, because as I said, we've got important American and Canadian news coming out. So in this respect, a reversal of data could be likely, because when the market does shoot up 20 to 30 pips, there is also the whipsaw effect of it coming back down 20 or 30 pips. So, and this is within a couple of minutes or even seconds. So obviously the amount of ticks that the market is hitting in a certain amount of seconds is obviously heightened during the high impact fundamental news events as well. And number 7, just move my head out of the way so you can see it, pay attention to the divergence between actual and consensus figures, because certain gaps or certain amounts might not be considered very effective. So for now, for example, when we get a jobs number of roughly about 5 or 10,000 differential than last month, or from the consensus, we don't expect there to be a big performing non-farm payroll. It's probably going to be more of a non-performer because we're not going to see a lot of things happening on the market if there's not really much in the way of a big divergence in the jobs number. So just something to look out for in that respect as well. And let's just take a quick look on the charts now as we enter the last 5 minutes before the NFP is released. So I just want to get my tables ready. So at the moment, just getting a basket of the majors and other indices and and gold as well as we go into the NFP. So I just want to look at what's happening. So for the euro dollar, for example, I was very, very interested in this 118 handle for the majority of yesterday's trading. We saw this big decline in the in the euro dollar pair. So a very strong dollar for the last few trading sessions. However, are we seeing a bit of a support now at the 118? I think so. It looks likely. I had a sell position in when we had this big dropped downwards because that confirmed to me that we are heading towards 118 for the euro dollar. And now I've still got my take profit in. So once we hit that 118, I'll be able to claim that in that sense. So what are we looking for in these pairs at the moment? Well, euro dollar, I'll be looking to see if we do get a bounce here, which it looks like we are going to do. Then if we just look at the daily range at the moment, we can see that we've dropped by roughly just over 30 pips. I'll be looking to see if that 30 pip move is going to be relinquished, to be reversed in time for the NFP, and we'll see if that's going to happen. So I'll just keep that on an hourly chart because I'm just more interested to see what the opportunities are there. So I'm looking at about 25 pips to really cover this hourly candle here. Pound dollar cable, we're just looking a bit choppy at the moment, so we could really hit these resistance periods here or here. Once we break there, then very potential lows under 139 for cable especially. It's been trying to reclaim 139 for most of the trading week. It did do, and now we could see a fall below the 139 handle, so this will be quite significant as well. Moving on to gold. Gold, it has dipped below the 1800 handle, but it is hovering just above it. So I'll just be looking to see if we can recapture that momentum and possibly jump by about $10. It's been in this choppiness. Just put it on the 4-hour chart. As you can see here, it spiked above 110 for a while, but the majority of the last few trading sessions, it has been having a confluence of between the 110 and 1800 handle, so that's quite significant as well. Don't really need to touch too much on the indices at the moment. The Dow, as I said, hitting the 35,000 handle for the first time ever. It's trying to keep above that now, 35,063. So we'll see what happens with that, and the S&P as well. Very, very significant in that respect, because we are looking if it's going to start closing record highs as well. The yen, very much a safe haven for a lot of traders. Again, following in the footsteps of a reversal of the euro dollar, we had this big spike on the dollar yen, very progressive dollar in the last few trading sessions. So we'll see if that keeps on pushing. And I've actually got the Dow up twice here, so I think I was a bit keen on it. So we'll just close that for now, and we'll just give another better perspective for the for gold and cable. And I just want to look at dollar CAD, because as I said, we are looking to see what the potentials are there. We are seeing that it's hitting the 125 barrier again, but as you can see here, we are facing some resistance at the 125.10, let's say. So it'd be interesting to see if that's going to spike up there. If it does, then obviously these potential prices up here will probably be hit and tested. There's a bit of a false break there at 125.20. So again, we'll see what the potentials are as we come into the last few minutes before the NFP data is released. And we should see markets start moving quite significantly there. But yeah, very interesting. With there's been quite a few confluence levels with euro dollar. We've got 118, cable 139, gold at the 1800 handle. We've got the loonie, the dollar CAD at the 125. So there's a lot of restrictions and support in the last few trading sessions that we are seeing if it can actually get through these numbers here. And we'll see what's happening as the numbers are momentarily coming through. So as I said, we've got employment change and unemployment rates and average hourly earnings for the loonie, and we've got the NFP, and we've got average hourly earnings and other government payrolls for then. So as you can see, we've broken the 118, so very, very strong dollar at the moment. And so reported at 943,000, so that's a very high number. So we should expect a strong dollar Average hourly earnings at 4%, consensus at 3.8%, and the unemployment rate was reported at 5.4, consensus was at 5.7. So very, very buoyant at the moment. You know, we've had a better than expected jobs number, better than expected unemployment rate as well. So we're seeing now what the potentials are. So let's bring the euro dollar out on a 4-hour just to see what the levels are. So we've had a few, legs here on the euro dollar. So the next expectation here is around where it's just finding a bit of resistance now. It's dropped by about 20 pips in the since the news was broken. So let's just check on the 1 minute. So we've had a spike of just over 20 pips. We're seeing a bit of a natural reversal now, but a very strong jobs number. And if we did get over that 1 million bracket, then we probably would have seen more of a collapsation on a lot of the pairs against the dollar, with the quote currency as the American greenback. However, we're seeing now, as you can see, the Dow hitting record highs by the looks of it, well over 35,000. Let's just see that on the hourly, 4-hourly. Okay, so it's attempting record highs at the moment. We're just seeing this kind of resistance here. I don't expect it to jump over these last record highs that we've seen, these last spikes of just over 35,160. So that'll be something to keep an eye out on as well. Very interesting there though. We've seen gold start plummeting a bit more. Gold usually starts moving during the NFP in $10 ranges, so I'm expecting, if we don't really break, have a confirmation break of 1790, then I expect gold to start pushing higher, reverse, let's say, and start just testing this 1800 handle once more. So nothing too surprising in the way of the jobs number. We got a higher than expected one, which is quite buoyant for the non-farm payrolls. But we're just seeing now what we're hitting. So okay, we've had a bit of an update recently just now. So actually the NFP numbers have come in at 703,000. So it has actually just missed the targets there. So it still is a good jobs number, and that's probably why we're seeing a reversal now of the pairs. So I've still got that on a minute chart, haven't I? Yep. So let's just see. So yeah, okay then. So we didn't get the 900,000 like it was just the flash report said. We're hitting 703,000. So that's what we are on at the moment. So the consensus was 769,000. We've hit 703,000. Sorry, no, the consensus dropped to 700,000, sorry, and the previous was the 769,000. So that's probably why we're seeing a little bit of a reversal, quite a sharp reversal there in most of the currencies here, apart from the dollar yen. Dollar yen's doing fantastically well, still hitting above the 110 area. Gold now, I'll just be seeing, as I said, if it's going to start testing this 110 region, sorry, the 1790 region here, and then to collapse more. So again, if we do that, then 1780 is my next target that I'll be putting a sell position in, and then again seeing what the opportunities are in that respect as well. So coming up to the first 5 minutes post NFP, so let's just take a more of an in-depth look into what happened with the euro dollar chart. So let's just zoom in for a better area. So what we're seeing here at the moment, we saw this 25 pip move, a bit of a false spike there. Then we saw a full reversal, and now we're seeing a choppy action as we go into the first 5 minutes. So what is important here is what I stress every NFP is, just because we're seeing a full-bodied candle from here to here, it doesn't mean that there's a tick, basically a price in every single a tick in every single price for every single pip in the candle. So if you had a entry point here, let's say a sell stop or a buy stop position at the 118 mark, and the price has been hit at 117.93, that means that the price has jumped from here down to here. So it's completely missed the price here, because effectively, if there's no price of 118 in the market at the time of the news release, then how can the trade be filled? And that's basically what the market is doing. So the execution of trades is based on if there's a price in the market at the time. So if there's a take profit or stop loss there, if the market jumps from this price to this price, then all these prices here, it means there's no ticks whatsoever, no prices, so it's filled at the next available price in the market, and this is at 117.93, for example, just giving you a quick example there. So just be careful when there are gaps in the market due to high impact fundamental news releases, because even, as I said, even though there isn't a gap on that candlestick, it doesn't mean that every price has been hit along the way. It might have gone from here to here, meaning that your stop loss or pending order, whatever it may be, has been cancelled or missed, and the next best price is here. So just be careful when that is being traded, not just for the NFP, but for high impact news events in general. So we're seeing a full reversal pretty much now on the euro dollar chart. As you can see on cable, that is, you know, quite a big doji there, full reversal pretty much in that respect. So as I said, the main reason for this on the euro dollar and cable is because it was a good jobs number, but it did miss expectations slightly in that respect. So we're just seeing what the important factors are and the opportunities for this time around. So as you can see, dollar CAD as well, we have had a bit of a false break, but now we are doing pretty much 100% reversal on that pair as well. And again, so we're seeing some resistance on the S&P and the Dow in that respect. So as you can see, it's tried to hit that last period, but it has fallen a bit short. So nothing too surprising for the NFP figures. You know, it has missed expectations by a few thousand, but not something to really sink our teeth into. I think gold is probably the main mover at the moment. We are seeing that it is plummeting quite a bit. So we're just going to see in the next few trading sessions as we go into next week. You know, we've got more Fed minutes coming up. You know, we've got more questions on tapering. We've got Joe Biden's infrastructure plan to keep an eye on to see if it is going to go ahead. That's going to plunge the economy into a lot more debt, you know, over $1 trillion. And that is probably going to affect the dollar index as well, because obviously the more federal spending there is, then, you know, the dollar index obviously goes down because it is getting more and more into debt, and, you know, government borrowing leads to possibly more tapering as well, and obviously that's going to lead to inflation concerns and the whole story that comes along with it. You know, with the government getting into more debt as well, you have to make sure that it's not getting too much into debt for it not to be able to pay back, and obviously this falls on the American taxpayer as well. So, and that's going to obviously affect CPI data, because consumers are not going to spend more on goods and services if things are higher priced. So coming into the first 10 minutes post NFP data, not really too much to talk about in the sense of where the prices are going. Like I said, for the euro dollar, we've hit these prices here, and now, as you can see, we've hit this other price that I laid out, and now we're going to see if it does a full reversal past up to the 118 handle. So a bit of a non-performer, you know, for the euro dollar, moving roughly about 20 pips isn't really so significant. Like I said on the presentation, if there is a move of 20 to 30 pips, we don't see that as major volatility. We saw you know, the 15-20 pip move in the first minute of the NFP, but there doesn't really seem to be much more in the way of that happening at the moment. So we'll see what comes of the story as we look into the other the other assets as well, and other instruments. So US, the Dow Jones, just looking to see if that's going to stay above 35,000, which will be quite significant there. Excuse me. So let's just mark out 35,000. So that's when we saw this bit of a continuation downwards in the last few sessions. and then we had a bounce at 35,000 and we're going progressively higher. If you are trading the Dow, then I would look at this confluence area that I've marked out at the moment, 35,000 to roughly 35,150, 60. Very, very tight consolidation there. And if we spike above it, then we are expecting more fresh record highs from the Dow. Conversely, if we go below 35,000 like we did here, then there is a chance that prices will start moving lower to the mid regions, or the mid regions of 34,000. But as I said, with the other factors to take into consideration is the fact that we are having a very, very good earnings season for Q2 at the moment, and that has really been shown in the prices for the Dow, Nasdaq, and S&P, and other indices across the world. The indices in general are flying at the moment due to very, very good numbers, and as I say, exceeding Wall Street expectations in the near term. So that's something to think about as well. So I'm just going to check what else is potentially coming up as we go into the final part of the NFP presentation. As I said, something to always keep an eye on during the NFP and other high impact fundamental news events is the news that could potentially be joined with it. So as I said, we've got the Canadian news as well, and later on today we've got the IB PMI for Canada, like I mentioned earlier. So something that could obviously shake the markets up more post market release as well. So if you are trading now, just be sure that you let the market noise calm down before you are entering any more trades. So like I said, with gold, I was looking at this 1780. It does look like it's going to start testing that region as well, and we are looking at a collapsation in the yellow metal at the moment. So 1781. So as I said, with gold, it usually comes down in $10 hits, and that's how I sometimes judge my entry and exit points as well. So entry point would have been 1790 for me, and then stop loss, take profit 1780. If it does pierce that, we can put another trade in, or continue the trade if you're feeling comfortable at this 1770, and this will keep probably collapsing. So didn't see those prices for roughly, since June. So we've got, the beginning of June, sorry. So we've got quite a few targets to test at the moment. And as you can see here, the 1750 is something that I always wanted to keep an eye on from before as well. So quite a few lines in here, but it's just the analysis that I like to take to make sure that I'm getting the best bang for my buck, and making sure that I'm not missing anything. So as I said, testing the 1780 there. Now we're seeing a bit more of a move, a confirmation for the euro dollar, as bulls are in the market for the euro dollar and cable especially. Dollar yen still pushing progressively higher. Very, very pleased with that currency, and obviously we are looking to break these previous tests here. Here was a little bit of a false spike that we saw in the last few trading sessions at the end of July. And then the natural course of action after that will be a test at the mid 110 range. So as I said, this is where we're seeing market noise become apparent, because the market is still moving, and we are still looking for these opportunities in the market as well. So just in closing with this month's NFP, as I said, keep an eye on post data release. We might get more of people speaking out on important internet news channels and major news channels in general as well. That can be streaming live at this point in time. See if there's any reactions to the jobs number and what the potentials could have been if there was this accentuation in jobs numbers for this time around. As I said, the consensus was that it was going to be more than 700,000, and we have actually hit that amount as well, but we just didn't get up to that magical 1 million figure. But it's not really too much of a burden in that sense, so we'll see how that is going to be adhered to as we go into the next few trading sessions next week. So that's all from the NFP seminar this time around. Thank you very much for joining me once again. This video will be posted on our YouTube channel, and also check out our blog at orbex.com for all the latest in high impact fundamental news events on our economic calendar, and anything that goes, anything that we usually talk about in fundamental aspects for this time around, including things like the Fed and also tapering, FOMC decisions and minutes and meetings, questions that are directed at the panel as well. And obviously, moving away from the American session, we also have a lot more information on our blog that we talk about in other currencies and economies to see what the potentials are in the long run and in the near term as well. So thank you very much once again. As I said, this will be posted on our YouTube channel, and you can comment, and don't forget to like and subscribe. And we will get back. I will get back to you as soon as possible if you have any comments or queries about anything market-wise. So thanks again, and have a great weekend ahead, and have a great trading week for next week. Bye for now.